In today's video, I'm going to teach you how to use the position tool for sizing in TradingView. We'll start right on the TradingView website. Once you're there, you'll see your chart area along with a watch list. Find the symbol you want to analyze on the right side, then click it to load that market on your screen. This ensures you're working on the exact instrument you intend to size a trade for, whether it's a stock, crypto, forex pair, or futures contract. Next, open the full chart view. Clicking full chart gives you a clean, expanded workspace with access to the complete toolset and more room to place and adjust your position tool accurately. A larger view makes it much easier to fine-tune levels like entries, stops, and targets. On the left toolbar, look for the section called Forecasting and Measurement Tools. Click it to open the menu. This is where TradingView keeps analytical overlays that help you plan, visualize, and measure trades before you ever place an order with your broker. From that menu, choose either the long position tool or the short position tool. Pick long if you're planning for price to move up, or short if you're planning for price to move down. With your choice selected, click on the chart at your intended entry price to drop the tool in place. You'll see three key elements: the entry line, a red zone representing your stop loss, and a green zone representing your target. Click and drag the stop handle to where your trade idea would be proven wrong. Then drag the target handle to your desired take profit level. As you adjust these, the tool displays the risk to reward ratio, percentage moves, and price distances in real time. This visual feedback is incredibly helpful for checking whether a setup meets your criteria before committing capital. If the entry needs refining, drag the whole structure up or down to align with your plan, then fine-tune the stop and target again. The tool helps you keep your analysis consistent. You're not guessing, you're measuring. As a best practice, place your stop where the trade thesis is invalidated by price action, not just at a round number, and set targets at logical areas like prior highs, lows, or key zones. Use this process to standardize your trade sizing. By planning entries, stops, and targets on the chart, you can quickly assess if the risk and potential reward make sense for you. This is for education only, but it's a simple, disciplined way to prepare your trades with clarity and confidence.